it says here traders encouraged to become authorised consignee. My advice was, yes, be authorised consignee, but only if you're bringing in full loads. If you're bringing in small 1s and 2s pallets, there's the hoops that you have to jump through with customs and the compliance associated with it. I really don't think that it's probably wise to do that. We're authorised consignee, we're authorised consignor. We've got a lot of exporters that we've now got them as authorised loading points. And again, it's a lot of compliance that's required. And then just look at your customs special procedures. So, you've got IPR, OPR, temporary admission, authorised use, depending on if you're doing reworking. We run a lot of contracts where it's reusable packaging, so that doesn't need to be covered off and duties paid on it, or VAT. So there's lots of different areas that cover that. But again, your forwarder should be able to advise you on that.
And that's the key, is your forwarders will help you with that if that's what you're doing. So use that information.
Yeah, and I think we pretty much covered this, Mike. Simplified declarations, AEO. So again, AEO, there was this myth around, everyone needs to be AEO. You don't need to be AEO unless you really want to run your whole customs compliance yourself. We're AEO and we have been for about 8 years now. So again, we're the ones getting the scrutiny from the HMRC and making sure that we're following the right procedures. Deferment accounts we covered, temporary storage, as I said to you, an ETSF, a bonded warehouse, an extension of the border, and authorised parcel operators, which obviously it's not an area that we handle, but essentially the goods do not exceed £135. They're exempt from a lot of the customs procedures that are required.
Yeah, and you can post it if you post small stuff under £135 and use the post office, who basically are the deferred service in the UK really for this. Other couriers do this as well, but the post office, you can post there and you'll fill in the appropriate documentation at their end, and that'll all be managed for you. Okay, quick overview of the VAT. Okay, the government has reinstated postponed accounting for import VAT. We talked about that earlier. So PV8 is what Trevor was talking about earlier. Non-VAT registered importers from EU will be levied at the port of arrival. Those importers with authorised economic operator consignee status still benefit from enhanced duty deferments. But again, probably unless you're an AEO status, I wouldn't need to worry about it. You wouldn't need to worry about that too much. And it basically mirrors the position for imports from the rest of the world today. So if you're already importing from the rest of the world, it's not going to be any different. So that will apply, and the same process will apply. And the duty deferment account, we just talked about that a little bit there earlier. I'm not going to go into great detail here, but at the bottom there, you'll see that traders are not required to meet the customs comprehensive guarantee criteria when obtaining guarantees. This is an easement that's been put in place to help businesses to manage that process.
Excise duty. So again, we touched on export, the same on imports. Again, previously wine could come in from Italy, France, no problem at all. But now it has to have a full customs regime. So we have to go through the EMCS system. There, we've actually got an application in at the moment with HMRC to handle alcohol and wines, etc. So again, there's lots of compliance that's required around that. So we can continue to move them goods, but again, it's the same on exports. I think that will just take time now for forwarders and logistics companies to start handling that kind of business. Most of that would end up going into a full bonded warehouse, and then from there the goods will be shipped. So it can be quite convoluted and complicated, but again, if we work through it with the right forwarder, then you should be able to move the goods successfully. So just summary on that, it's the paperwork in advance. And what I'd always say before the goods are shipped from your supplier, get a copy of the invoice and make sure it's in the right state, because all that's going to do is create delays for you this side, and you'll have to go back to them and ask them, oh, can you amend this? Can you change this? And this is what we found in the first sort of 3 or 4 weeks. But the quality of the paperwork is getting better now, because we're just basically refusing. We cannot do an import declaration if we haven't got the right information. So it's a UK import as the EORI and a VAT number, commercial invoice, tariff headings, country of origin, values, number of units, and the summary on the invoice. So it's exactly in reverse of what we said about exports, because you want your goods on exports to clear quickly in the EU, get to your end customer, so they can sell and reorder, and vice versa.
Okay, thank you for that, Trevor. Just have a quick look at commodity codes, temporary tariff regime and contract terms. So obviously, if you're already trading, already exporting, you'll know that you need to obtain your commodity codes. There's a link there that helps you get straight through the government link to the commodity code section, so you can find out what that is. And it's based on World Customs Organization harmonized systems. So there should be correlation between different countries' numbers going forward. And it identifies the import customs duty rates and additional taxes. And we have this conversation. I know John, who's on the call today, we've had a conversation about this. It should ultimately, and it's not at the moment because I have checked, telling you what the rules of origin percentages for your maximum percentages should be. They're not on there at the moment, and I just guess that's a delay in getting that updated, but that is where you should be able to find that information going forward. It links to other measures relating to the import or export of the goods, such as a need for licenses, and I said there the rules of origin, as I mentioned. So it will tell you for that product you're going to need a license. So you know, you should be able to find out whether or not you need special conditions to export what you're doing. So if you're going to be doing this, you need someone in your business who must take responsibility for this process, making the goods, moving the goods, preparing the paperwork, obtaining a license, making the export declarations, paying the duties at import, the risk if goods go missing or they're damaged, how you're going to manage that. But actually, we're saying to people, really, if you're not, unless you're doing masses of pallets every day, use a freight forwarder, and your internal responsibility is about liaising with the freight forwarder, making sure you're giving them the information they need to get your goods moving through the process as smoothly as possible. I'll quickly go through this. I know Trevor will want to say something about this as well. International contract terms, or you will hear the term Incoterms. But on the left here is what's called ex-works. Now that means that your terms are that once it's left your premises, the only risk you've got is the packaging. After that, all the risk is with the buyer. Chances are your buyer isn't going to want to work on ex-works. While we were in Europe, as part of Europe, it didn't matter because there was no issues with moving it through borders. And similarly, at the other end, delivered duty paid, where all the risk is with you as the seller. So what we're saying, and Trevor will talk about this in a minute, is look at a term that sits in the middle somewhere and have a negotiation with your purchaser in Europe as to what suits best for them, or you just apply your terms, and this is your terms of trading. That's a commercial discussion for yourself. Trevor, do you want to come in there and just talk about Incoterms?
Yeah, as you said, DDP is probably I'll be very hard pushed to find a forwarder and logistics company that's going to accept DDP because of the VAT liabilities, the import VAT liabilities that come back. So what we're seeing, the majority of goods are now shipped on DAP, but for us, there's two sort of, it's called a degradation of the terms. So we're calling it DAP uncleared. So that means that any import clearances in the EU, any duties and any import VAT go forward to your client in the EU, the importer of record, or what we're calling is DAP duties and fees paid by shipper. Essentially, that means the import clearance and any duties come back, say via our partner in Europe to us, and then we bill the exporter, but the import VAT is still paid by the importer of record. So I think DAP is probably the term that you need, but there's obviously a degradation of that term in terms of what goes forward and what goes back. Once you've shipped to the same importer and that relationship has been handled locally by your customer in the EU and say, our partner in whatever country it is, it's the same in reverse. Once we've done it once for someone as an import of record, we've got that now. They've signed the power of attorney, which means we can do that import record on their behalf, and it becomes regular. And then, you might get a delay on the first one or two shipments because of the import VAT, and there's a discussion around how that's going to be paid and how's that going to be collected. But it gets easier, and we're seeing that now, in particular on both ways, exports and importers, as regular shipments go out. Okay,
there's a couple of examples there. Do you want to talk us through those examples, or just we leave those?
I think we just leave them, Mike. We sort of covered them off,
Oh yeah, so there's the FCA and DAP that Trevor was just talking about. So two slightly different ends of the spectrum. So I'm just going to quickly talk about rules of origin. And this is a really classic example of where confusion has arisen. So Percy pigs manufactured in Germany, shipped into the UK by M&S, taken out of customs, so taken into their factory where they put them into little bags, M&S bags, and then they were going to ship them back out to the Republic of Ireland. Now this has caused a lot of discussion and confusion as to whether or not duty is paid, but it's just a good example of why there's confusion. Logic would tell you it's coming from Germany, it's going to end up back in the EU again, i.e. the Republic of Ireland, but the problem was it came out of customs, came into free circulation in the UK, was then put in bags, and then there was a question mark, well, hang on a minute, should there be some duty? What are the rules of origin? Is this a UK-based product? No, it's German. And there's also been all sorts of confusion and discussion around this and different interpretations on that. So it's just an example of the total confusions. However, in simple terms, rules of origin are to make sure that the correct duties are collected by the EU with regards to their agreements with other countries. They don't want the UK used as a backdoor for getting goods into the EU and they're losing out on the tax as the EU, because we're not part of the EU, we're not putting money into the EU anymore, so that would lose them revenue. So this is what rules of origin are about. Now, what that really means is if you manufacture goods and you use parts from China, you have to understand what the max-nom, it's called, maximum value of non-originating materials is as a percentage against the Ex Works value of your product. And it's different for all different products. However, if you manufacture some electrical goods, for example, a certain percentage of that product, once it's been finished, can be from China, but still be classed as UK origin. Now, typically the percentages are between 40 and 60%. But as I said, they are different for different products. However, if you don't put extra value, manufacturing value into your product, it can be actual manufacturing process, it doesn't have to be physical additions to the product in the UK, it can be, you know, how much you change it, then if you don't meet that requirement, then a duty will be due, because the rules of origin will say that product originates primarily from China. There is a thing called bilateral accumulation, which allows a product to have additional input, which is from Europe, once its origin has been determined, which can then be used as to determine a UK origin. So it doesn't change it from external origin, it keeps it as a UK origin product. And as I said before, you can find this in the commodity codes in theory. You can't yet, they're not there. So what I would do is I will refer you, I think you should refer to the Free Trade Agreement, the FCA, download a copy of it. The piece that's interesting for you is under Section 2, Annex 1, which is an introductory notes to product-specific rules of origin. That gives a good explanation. Page 425 explains how max-nom is calculated, what it means. And then on page 479, there's another annex, which is a nice table, and it tells you by commodity code what the percentage of max-nom is, i.e. is it 50% maximum non-originating materials, or is it 40, 60, whatever it is. So you should be able to find the information there. So in summary, unless you're very conversant and competent with international trade today, use a freight forwarder and or a customs agent. Preferably use an international integrated freight forwarder. These companies have their own offices in most countries around the globe, or good partnerships with partners they've worked with for many years. They should have the bandwidth to deal with the increased volume, hopefully, but I know we're seeing a lot of stress on that as we go forward. But there's a few extra links there to help you.